Now let's head to Egypt, where its central bank kept its key interest rates unchanged on Thursday in its first decision since it raised rates by 150 basis points last month. Now, last month's decision, however, hasn't settled in the market just yet. Some Egyptian banks are offering investment certificates at a 15% annual return. Egypt has been facing a foreign currency shortage since the 2011 unrest drove away tourists and foreign investors, both major sources of hard currency. On March 14th, the central bank devalued the pound to 8.85 pounds per dollar from 7.73. 2 days later, it strengthened the currency slightly to 8.78 per dollar as it adopts a more flexible exchange rate policy. Now let's get more insight into today's decision. Adele Marie now joins us in Cairo. Adele, welcome to the show. Now, of course, the consensus was that the Central Bank of Egypt would hold interest rates steady today. What were some of the key takeaways from today's MPC announcement?
Well, basically, it means that it was actually expected because, as you said, some of the banks are still settling in with previous months' new rates. The bank, as you know, has kept the interest rates for deposit and credit to about 10.7% and 11.75% respectively for both. Banks have offered the investment certificates that you've mentioned, and they've opened the registrations for such certificates for 2 months, which basically would be a hit if the central bank changed the interest rates in that period. At the same time, it was expected because mainly it wouldn't have the capacity to increase the interest rates and therefore tarnish and put more burden on the government's debts that has been already calculated on the new rate, and on the other hand, pushing down the interest rates with what the banks have been offering recently would devaluate the Egyptians' the savings in Egyptian pounds in general in the bank. So that was the safest move, and the central bank is actually trying to take it a safe step one at another until they can examine exactly how the influence will be on the market.
Now, Adele, it's been just over 1 month since the devaluation of the pound. And of course, it seems like Egypt is back to square one. What is the CBE's plan to close that widening gap, of course, between the formal and informal market?
Well, basically, it has been holding much stricter measures against the exchange outlets in the country that violates the official rates. As you know, that the official bank rates for the Egyptian pound against the US dollars is about 8.78 pounds for $1, while in the actual value on the black market is around 10.5%, 10.5 pounds. Sorry. So there is a huge gap. We're talking about 20% difference from the official rates and what exists on the market. Last week, the central bank has suspended 9 exchange shops in the country. Just this week, 4 companies have, the central bank has withdrawn their certification and licenses in general. So that's a permanent shutdown for them. But there are concerns that such measures will push the black market not just to operate behind their official outlets, but will push them far from any possible supervision from the authorities in general. There has been a trending way to exchange currency in Egypt just by a phone call, a delivery. So it's happening outside any monitoring device, and this is where the main challenge comes for the central bank.
Quite interesting. Well, many thanks for that insight, Adele. Adele Maroui joining us in Cairo.